All right, folks, welcome back. This is our midweek review for the ICT Mentorship. Hope everybody's doing well, having a pleasant week and day. All right, so here we have a little bit of luck on our side. I'm saying that with my tongue in cheek, obviously, but dollar index obviously delivered to all of our targets. 103 smoked beautifully and reacted off of a level that I gave publicly on YouTube. And yes, I know a lot of you are emailing and sending short little remarks saying they have no idea what was just shared with them. And it's true. They really don't appreciate it. They think it was a magic trick. But here we have again one more instance where the things that you're learning comes to fruition, and it's just a beautiful feeling to see this happen over and over and over again. Now, here's one of those crossroads where it's not fun. Why? Because we've had our targets met. So now, while I still hold on to a bullish stance, I don't know where it's going to go. Okay, I can say maybe 105, 107 on a completely blow off type move on the upside, but I don't know. So this is where, in my analysis, I go neutral. I have a bias that's bullish on dollar, but I'm not actively trading. So it's a matter of me just observing. Now, it may seem counterintuitive, it may seem counterproductive, it may seem like, well, why would you want to do that? Because it's already done just about everything I would expect. So if I start buying dollar or being net short foreign currency, essentially, because I don't trade the dollar, but to be net long at these levels, it's extremely rich in premium. So it's likely to have corrections. Reversals are likely. I'm not suggesting one's in the making here, obviously, but it just the odds of downward movement, sharply unexpected, can occur, especially in the climate that we have right now. So what does that mean? It just means that we keep our focus on the index futures. And I know some of you don't want to do that. I understand, but price is price, and it keeps you refined. It keeps you working towards understanding what all markets are going to do for you if you're sitting in front of them. But as it relates to Forex, it's pretty much done its thing for me for this short period of time. Okay, and I'm going to have to wait for new developments. And it's probably going to be boring, when I'm talking about dollar for a little while. How long, I don't know. But just know that I'm bullish on dollar, but I'm not actively trying to pursue anything in a short on any of the other pairs, okay? All right, hourly chart on the dollar index. You can see we had a really nice run up to and through 103, went to 103.282, and then came back down below 103 big figure. The 15-minute time frame, you can see again, really nice little run up. Accumulated around the 103 level, sent it into just about 30 points or pips above the big figure 103, and then sharp retracement lower back into this little imbalance in here. So right now there's a lot of liquidity resting below here. Can it go down there, tag into that, and then resume? Yes, it can. That's one of the things I would be mindful of, trying to be net long on dollar, because that could happen, and that might cause a short-term little snappy rally or two in foreign currency, as it did this move. And I'm not saying it will, I'm just saying that it could, and I don't know that it may or may not. So again, this is why I'm neutral. Contrast that with what we've been doing for a couple weeks now, looking for higher dollar, comfortable with it, not beating our chest saying we're infallible, it's going to happen. It just means that we had a strong likelihood of these objectives being met, and now they have been. So again, the concepts work, the analysis concepts work, my analysis is on point, and one of the main staples to being mature as an analyst is knowing when your edge, when your model is at its outer boundaries of this is about as far as you're going to get, or as much juice as you're going to get with high probability. So then you have to know when to draw back in and say, okay, I'm not going to stick my neck out there anymore. It's already done what I needed it to do. I've already either gleaned the analysis, profited from the trades, or learned from the delivery because of studying and back testing and that type of thing. So right now, I have moved myself in my mindset to, while yet still being bullish, now I'm neutral. So I'm not trying to participate. I'm not looking for anything particular. It just has done everything I wanted it to do. Euro dollar. All right, this puppy has finally delivered, and it was really nice to see it run through that old low here. It just poked through it yesterday by a little bit, and then today, just for good measure, it really sank down below it. So again, we're anchoring to that old low back here. So on your daily chart, just scroll back to the left, you'll see that low. Drop a horizontal line on that, or a line segment and such, and you'll see that. Let's zoom in. Again, here's that little tiny little move below it. Not by much, but it was enough. But you know what's resting below that old low, right? Sell side liquidity or interest below that old low. As traders see that, they think, okay, well, I want to get short. There's sell stops in that regard. And that drive down below activates those orders. And we had about 100 points or so below that level. So that's not bad. All right, here's the hourly chart here. I'm showing the last 2 days with the kill zones. The blue is the London Open, and the, I don't know what that is. Is that tan? Tan, or I don't know what it is. Okay, don't hold me to it. I don't know what that is. I'm almost colorblind, so this might look like tan to you, hopefully. But this is New York, this is London, and this is London, and this is New York. Okay, for the respective 26th and 27th, which is today's price action here. So we had a really nice drop down after coming up into an optimal trade entry here, and then sold off in London. Continuation in New York, we have a high, low, optimal trade entry. It's real hard to see it on the hourly, but if you drop down lower time frames, you can see it. Again, London Open sells off, and then just to run aggressively lower in New York after a little bit of a retracement in here. Starts at 7 a.m. and just starts the rapid descent into a deeper run below that old daily low. And a little bit more detail on the 15-minute time frame for euro dollar. Here is Tuesday's trading. Again, optimal trade entry. Bearish order block. Here. Sells off, optimal trade entry. There at London Open. Sells off. And then we have fair value gap, optimal trade entry, New York session. Breaks lower. Rebalance here. Drops down. I was going to post on the community tab on my YouTube channel here, but I figured I'd wait for it to obviously make a more pronounced decline below that old daily low. Just banged around on that, and then in London Open today, we went up into and then sank it after taking out short-term buy stops, and then consolidated ahead of New York, and then straight away at New York 7 a.m. just ripped lower and dug down into a move below. Pound dollar. This one here really took a dive. Went below the relative equal lows and went below that old low here. This is the next short-term low where liquidity is residing, and then we have the imbalance down here. So we're in close proximity to that. So if we continuously move higher on dollar, this is what I'm expecting on pound, and then moving below this level here, that would be the next objective. So we have 3 levels to watch. Here, the range on the fair value gap here in the form of a BISI, and the sell side liquidity resting below that short-term low. Just ahead of July, I guess that would be July's, not July, but right before July's low. All right, zoomed in, you can see here we have a nice decline, sharp decline, and that's on the heels of what? Higher dollar. So keeping our eye on our barometer, that being the dollar index, we've been maintaining a bullish stance on dollar. We've been looking for specific levels in dollar, and it's done exceedingly well. It's done very, very well in terms of delivering, being precise about what it's looking for. Its delivery and price has made perfect sense, and it has met all of our objectives. Since that was the case, we see all the downside objectives being met with relative ease in euro and on cable. You can see here we had a nice SIBI here. We trade up into that, consequent encroachment or thereabouts, and then breaks down institutional ortho Intrajo here. Breaks down, and then today had a little bit of a muddy price action, just choppy, but dug a little bit deeper. But these objectives here, should we see continuation on the upside with dollar, that's what we're looking at next. In the 15-minute time frame, you can see again just a very difficult day, admittedly. I mean, this is not something that would be very easy to trade. And again, that's another reason why I'm neutral, even though I have a continuation in mind for dollar going higher and these foreign currencies going lower. They're prone to be choppy, running back on liquidity before we see another meaningful decline. That's kind of like what I'm getting at here. So that's not a favorable trading environment in my definition. So I think that's going to be it. Obviously, I'll talk about the E-mini S&P tonight on the YouTube channel. I'm doing kind of like a special video. Okay, until I talk to you tonight in the YouTube video, be safe.